unravel the surprising story of the US dollar, its unparalleled global power and future.
Get clear insights on the dollar's rise and future.
All right, everyone, welcome back to the Deep Dive. Today, we're going to unravel the fascinating, sometimes surprising story of something you probably interact with every single day, the US dollar.
That's right.
We're talking about its unparalleled global power, why it became the world's go-to currency, and all the intense conversations happening right now about its future.
There's a lot of chatter about that lately.
Definitely. Our mission: to cut through the noise, give you a clear, comprehensive understanding of how the almighty dollar reached this position and, what might be next.
Mm-hmm.
We've pulled from a stack of amazing sources for this deep dive, everything from the IMF and Federal Reserve to the Financial Times, The Economist, and Bloomberg. Get ready for some serious insights.
And this really is a deep dive for anyone curious about global finance and, how power subtly shifts around the world. The dollar has held a truly unique historical role for over 75 years.
It really has.
And what's so fascinating is how it remains so dominant, even as more and more challengers emerge. Understanding its journey is absolutely crucial to seeing where the global economy might be headed.
So where do we begin the dollar's rise to power? How did it all start?
Our story really kicks off right after World War II. Think about the Bretton Woods Agreement in 1944.
Okay, Bretton Woods.
Exactly. Imagine. 44 allied nations, looking at a world shattered by war, decided they needed a new, stable, international monetary system. The big decision they made. They pegged most global currencies to the U.S. dollar.
To the dollar.
And the dollar, in turn, was convertible to gold at a fixed rate of $35 an ounce.
Wow. And that one decision really set the stage, didn't it?
Absolutely. This single act cemented the dollar as the cornerstone of global finance. It became the leading reserve currency because, the U.S. emerged from WWII with an incredibly dominant economy.
Just powerhouse status.
Yeah, accounting for around 40% of the world's GDP at the time. Combine that with its stable political system, and you had a recipe for global trust in the dollar. The U.S. essentially became the financial leader, institutionalizing its role through the IMF and World Bank. By the 1960s, this global demand conferred what Francis Valéry Giscard d'Estaing famously called an exorbitant privilege.
Exorbitant privilege? I like the sound of that. But what did that actually mean in practice for the U.S.?
Well, it meant the U.S. could effectively print money to finance its activities, and, crucially, borrow at lower interest rates than other nations.
Oh, okay.
Because the world was constantly demanding its currency for trade, for investment, and just as a stable store of value. It's an incredible advantage, really.
Right. So fast forward to the 1970s, even after the Bretton Woods system faced some serious challenges, the dollar found a new, powerful anchor. Tell us about the petrodollar system.
Yeah, this is key. In 1974, the U.S. struck a truly pivotal, though technically informal, deal with Saudi Arabia.
Okay.
Here's the core of it. Saudi Arabia agreed to sell its oil exclusively in dollars.
Only in dollars.
Only in dollars. And critically, recycle those massive oil revenues back into U.S. Treasury bonds. In return, they received American security guarantees.
So wait, if you wanted to buy oil pretty much essential for everyone, you needed dollars? That sounds like a genius move to keep dollar demand sky high.
Exactly. It was a masterstroke, intentional or not, in its full scope initially. This arrangement ensured continued global demand for dollars because oil is the world's most traded commodity.
Can't live without it.
Pretty much. And it also created a steady, massive foreign buyer for U.S. debt, those recycled oil revenues. Even today, major commodities are still primarily bought and sold in dollars, reinforcing its dominance across international trade and commodity markets.
And the dollar kept that lead through the 80s and 90s. I mean, we saw the Federal Reserve under Paul Volcker successfully tackle that sky-high inflation from the 70s.
Right, that restored a lot of confidence.
Which really boosted the dollar's value perception. Then, in 1985, the Plaza Accord kind of showed America's central role, didn't it? Nations actually coordinated to weaken a dollar that had grown too strong.
Yes, exactly. It demonstrated that the dollar was the central player. And, while Europe introduced the euro in 1999 as a potential challenger.
A big challenger, potentially.
Potentially, yes. But it only gradually gained share as a reserve currency, never really surpassing, say, 20–25% of global reserves. So by the turn of the millennium, around 2000, the dollar was still essentially unchallenged.
King of the hill.
King of the hill, making up around 70% of central bank reserves worldwide. and underpinning the vast majority of trade invoicing and foreign debt. Its breadth of use was, well, truly remarkable.
But even a king faces challenges, right? When we look at the shifts, the turning points, it was arguably the first really seismic event that tested the dollar's foundation.
That would definitely be the Nixon Shock in 1971.
Nixon Shock.
On August 15th of that year, President Richard Nixon unilaterally decided to end the dollar's convertibility to gold.
Just like that. Why?
Well, years of heavy U.S. spending, think Vietnam War, Great Society programs, meant there were far more dollars floating around overseas than the U.S. actually had gold in Fort Knox to back them up.
Uh-oh.
Yeah, there were real fears of a run on U.S. gold reserves. So Nixon's move effectively broke the Bretton Woods system, decoupled the dollar from gold.
Okay, so on paper, this could have completely shattered trust in the dollar. I mean, it's not as good as gold anymore, but that didn't really happen, did it? What's the core insight here?
It's a fascinating paradox, isn't it? The core insight, I think, is that the dollar's strength had already kind of transcended its gold peg.
Interesting.
It became anchored more by the sheer might and the perceived credibility of the U.S. economy itself. And, of course, the subsequent Petrodollar Pact helped solidify this.
Right, the oil connection.
Exactly. Plus, there simply wasn't an immediate viable alternative reserve currency ready to step in. So the dollar retained its central role, shifting from being backed by gold to being underpinned by U.S. economic strength and, importantly, policy credibility.
Okay, so the 1970s continued to be pretty turbulent after that. We had the OPEC oil embargo in 1973, which sent oil prices through the roof.
Absolutely soaring.
Leading to that nasty combination of stagflation, high inflation, plus economic stagnation.
Yet the U.S. managed to navigate this, partly by leveraging that very petrodollar system we just talked about. This era really underscored how geopolitics, conflicts in the Middle East, U.S. foreign policy decisions, directly impacted the dollar's strength.
It all connects.
It all connects. But it also had a kind of counterintuitive effect. Volatility actually prompted countries like Germany and Japan to accumulate more dollar reserves as a buffer, ironically reinforcing its status even further.
Huh. Okay, let's fast forward a bit into the 21st century. 2008, the global financial crisis, a huge meltdown centered right in the U.S. That must have been a major test of confidence.
Oh, absolutely.
We even saw China's central bank governor in 2009 openly calling for, a new global reserve currency, maybe using the IMF's special drawing rights more.
That definitely happened. But here's the surprising outcome again. During the absolute peak of the panic in 2008, where did global investors run?
Let me guess. The dollar.
Straight into U.S. dollars and U.S. Treasury bonds. They were seen as the ultimate safe havens. So paradoxically, this strengthened the dollar amidst the turmoil.
Wow.
Now, it certainly spurred more serious discussions about diversifying reserve assets, no doubt, and it probably accelerated efforts by countries like China and the BRICS nations to look for alternatives. But ultimately, the dollar bounced back strongly.
Okay, bringing us much closer to today. The 2020s have brought a whole new set of concerns. U.S. debt, inflation, and this idea of weaponization. U.S. government debt has absolutely exploded, right? Exceeding 120% of GDP after all the COVID-19 stimulus.
It's a huge number. And then you had that surge of U.S. inflation hitting, around 9% in 2022. That caused ripples everywhere.
And the weaponization part.
Right. This is really eye-opening. It refers to the increasing use of sanctions and dollar weaponization. The U.S. has really leaned into using financial sanctions, leveraging the dollar's central role in the global system as a major foreign policy tool.
Like with Russia.
Exactly. The most dramatic example was in 2022 when the U.S. and its allies froze an estimated $300 billion of Russia's foreign currency reserves held abroad.
$300 billion.
A staggering amount. And while arguably effective as a sanction, these actions sent a powerful message to the rest of the world. Your dollar holdings can become a geopolitical vulnerability if you fall out of favor with the U.S. Even U.S. Treasury Secretary Janet Yellen acknowledged this risk, cautioning that overuse of sanctions could threaten the dollar's hegemony by inadvertently pushing rivals to develop alternatives faster.
And are they?
It seems so.
Yeah.
Countries like Russia, China, and Iran have definitely stepped up their de-dollarization efforts in direct response. They're actively trying to trade more in their own currencies or other currencies.
So using the dollar as a geopolitical tool creates this powerful effect, but it also fuels this pushback. And this ties directly into the broader global power shifts we're seeing, doesn't it?
Absolutely.
The U.S. share of world GDP, as you mentioned, has declined from that post-war high of maybe 40% down to roughly 25% today. Meanwhile, China's economy has risen dramatically. dramatically.
Exactly. Depending on how you measure it, like with purchasing power parity, China's economy is already larger. So it logically follows that as economic power becomes more multipolar, less concentrated in the U.S., the international monetary system itself could become less dollar-centric over time.
The dollar's unipolar moment may be fading a bit.
That's a good way to put it. And you see institutions emerging like the BRICS Development Bank or China funding projects through its Belt and Road Initiative. These are all maybe small individually, but collectively chipping away at the edges of dollar primacy.
So, okay, what does this all mean for the dollar's standing right now? We hear so much buzz about de-dollarization in the news. Is the dollar's dominance actually measurably on the decline?
Well, the data tells an interesting, maybe nuanced story. Central banks have indeed been gradually diversifying their reserves. Remember that 70% figure for dollar reserves back in 2000?
Yeah.
Today, according to IMF data, it's hovering around 58, 59%. So a noticeable drop.
Where did that money go? Euro, yen.
That's the really interesting part.
Yeah.
The shift hasn't primarily benefited the other major traditional currencies like the euro or the yen that much. Their shares have been relatively stable or even fallen slightly.
Huh. So where then?
Instead, reserves have increasingly moved into what the IMF calls non-traditional reserve currencies. Think the Australian dollar, Canadian dollar, Swiss franc, and significantly, the Chinese renminbi.
Ah, the smaller players and the yuan.
Exactly. And alongside this, we've definitely seen an uptick in central banks buying gold, likely as a hedge against geopolitical risk and, well, maybe against the dollar itself.
And what about the BRICS nations? Brazil, Russia, India, China, South Africa, they seem quite vocal.
They are. They've openly questioned the need to trade predominantly in dollars. Brazil's president, Lula da Silva, famously asked, why can't we do trade based on a common BRICS currency? But frankly, most experts are pretty skeptical about that, at least for now.
Why skeptical?
Well, these countries have vastly different economies, different political systems, no shared central bank, no deep, pretty unfeasible in the near term.
So more talk than action on a BRICS currency.
For a common currency, yes. It's much more about taking incremental steps, like agreeing to settle more bilateral trade using their existing national currencies, bypassing the dollar where possible.
Got it. And China's yuan or renminbi, RMB, that seems like the most concerted effort to build an alternative, right?
Absolutely. China's RMB is definitely the most proactive challenger out there. Beijing has been pushing hard for years to internationalize the RMB.
How have they done that?
Through several avenues. Signing bilateral currency swap lines with dozens of central banks, launching its own cross-border interbank payment system, CIPS, as a potential alternative to the dominant SWIFT network.
Okay.
And heavily promoting RMB use in trade and investment, especially through its huge Belt and Road Initiative infrastructure projects.
And has it worked? Are we seeing results?
In 2023, the RMB made up roughly 3% of global reserves. Now, 3% sounds small compared to the dollar's 58%.
It's tiny, relative.
Relatively tiny, yes. But it's a significant jump from basically zero back in 2000, after Western sanctions effectively cut Moscow off from dollar and euro markets.
That's a big shift for Russia. But what are the main hurdles holding the yuan back from, truly rivaling the dollar on a global scale?
Despite China's push, significant barriers remain. A major one is China's strict capital controls. They limit the free flow of money in and out of the country, which makes international investors wary.
You can't easily get your money out if you need it.
That's the apparent and less liquid for foreigners compared to U.S. markets. And then there's the element of global trust. Yeah, questions about the rule of law, the predictability of regulation, and the influence of the Chinese Communist Party over financial policy. These things tend to curtail global confidence in the RMB as a truly safe, reliable reserve asset. As one Council on Foreign Relations analyst would bluntly put it, China does not have the intention or the capacity to dethrone the dollar, at least not yet.
Okay, what about the euro? It's still number 2, right?
It is. The euro holds steady.
On the dollar, why not?
It also has limitations. A key one is the lack of a single European fiscal authority. There's no unified Eurozone Treasury issuing Eurobonds on a massive scale like U.S. Treasuries.
Ah, so the bond market is fragmented.
Exactly. It's more a collection of national bond markets, German bonds, French OATs, etc. This fragmentation, plus memories of past Eurozone debt crises, has kind of capped the euro's potential to seriously challenge the dollar's dominance, especially as that ultimate safe haven asset.
Right. And you mentioned we're also seeing some signs of de-dollarization in actual trade practices and maybe technology playing a role.
That's right. On the trade front, we are seeing more countries trying to use local currencies for bilateral trade. We mentioned Russia and China doing more in rubles and yuan. India has settled some oil purchases from Russia in rupees. Some Gulf nations are reportedly considering accepting yuan for oil sales to China.
Small steps, but adding up.
Small steps, yes. And there's also a push to link national payment systems together, again bypassing the traditional dollar-based networks like SWIFT. These efforts are still pretty early stage, though.
What are the drawbacks?
Often these non-dollar transactions still involve higher costs, things like currency conversion fees or managing exchange rate risk compared to just using the deeply liquid established dollar networks.
Makes sense. And technology. Digital currencies.
This is where it could get really interesting down the line. Technological changes like central bank digital currencies, CBDCs, that many countries are exploring, or potentially blockchain-based payment systems could eventually reduce those frictions we talked about.
Making non-dollar payments easier, faster, cheaper.
Potentially, yes. Though it's worth noting, the U.S. isn't standing still here either. The Federal Reserve launched its FedNow instant payment system in 2023. Not revolutionary, slow change.
And a very real-world, concrete example of this de-dollarization push driven by geopolitics is what we've seen with sanctions and gold, right?
Absolutely. This is a clear case study. Countries that have been targeted by U.S. sanctions, especially Russia after the 2014 Crimea annexation and subsequent sanctions, radically reduced their holdings of U.S. dollar assets.
What did they? Much higher levels.
Much higher. Similarly, China itself has been gradually trimming its holdings of U.S. Treasury bonds over the last decade, while adding more euros, yen, and especially gold to its reserves.
And other central banks are buying gold, too.
Yes, big time. Central bank gold buying worldwide hit multi-perceived risk of the U.S. using the dollar as a, quote, foreign policy bludgeon.
Okay, so putting it all together, the bottom line. How far has the dollar truly fallen? It sounds like the verdict is dominant, but maybe slightly less unquestionably dominant.
That's a good summary. By most metrics, yes, its dominance has eroded slightly at the margins. Its share in global reserves, down around 58%, is the lowest in about 25 years.
Any other metrics?
The share of global exports invoiced in dollars has dipped a bit. The proportion of international debt issued in USD is also down slightly from its peak, though still very high.
But there's always a but.
There is. To counterbalance that, the dollar's role in foreign exchange markets remains absolutely central, almost unchanged. It's involved in roughly 88% of all FX trades globally.
88%?
It's huge. It's the vehicle currency.
Mm-hmm.
And most global commodities, oil, metals, grains, plus many international financial assets, continue to be priced primarily in dollars. So while there are definitely, as some analysts say, multiple small cracks appearing.
Not a collapse.
Certainly not a collapse, not even close right now. Analysts from Reuters and other outlets consistently note that any significant shift away from the dollar would be very slow. Think decades, not years. Maybe like the very gradual decline of the British pound sterling over the 20th century.
Okay, so even with all these challenges, the debt, the sanctions pushback, the rise of China, the diversification efforts, what are the fundamental reasons the dollar still reigns supreme, for now at least?
There are several really powerful reinforcing factors. Firstly, and maybe most importantly, the U.S. simply offers unmatched financial markets. Deep, liquid, and open.
What does that mean practically?
It means especially the market for U.S. Treasury bonds. It's enormous, over $22 trillion outstanding. It's widely considered, as one analyst called it, the world's leading safe asset, or reserve asset.
The go-to place for central banks to park money.
Exactly. This market provides incredible scale and liquidity. Large investors, like foreign central banks or huge pension funds, can buy or sell billion. Size gives the dollar a massive advantage. Plus, the fact that the dollar is so heavily traded in foreign exchange markets means there's always ample liquidity, 247.
Okay, deep markets. What else?
Secondly, U.S. economic size and stability are still paramount. The U.S. remains one of the world's largest, most innovative, and most productive economies, making up about a quarter of global GDP.
And stability matters too.
Hugely. Just as important is its long track record, relatively speaking, of low inflation, respect for property rights, an independent central bank, the Federal Reserve, committed to price stability, and a generally stable, predictable legal and political system.
Even with all the political noise sometimes.
Even with the noise, compared to many other places, the fundamental institutions are seen as strong. This gives global investors confidence that the dollar will broadly hold its value over long term. This is why, as we discussed, The dollar often acts as that ultimate safe haven during global turmoil.
Right, the flight to quality.
Exactly. Money flows into U.S. bonds and the dollar when uncertainty spikes elsewhere. Whether it's a Eurozone crisis, an emerging market wobble, or a pandemic, it's a powerful vote of confidence, even if paradoxical sometimes.
Okay, so deep markets, stable economy. What's third?
Thirdly, there are incredibly powerful network effects and sheer inertia. The dollar is just so deeply entrenched in the plumbing of the global financial system.
Built up over decades.
Over 80 years now, since Bretton Woods, so many existing contracts, loans, trade deals, and financial benchmarks are already denominated in USD. It becomes a classic case of everyone uses it because everyone else uses it.
Self-reinforcing.
Very much so.
Yeah.
Mention the figures. Roughly 58% of global trade is invoiced in dollars, even for trade that doesn't involve the U.S. at all. About 64% of the world's cross-border debt is in dollars. Changing all of that, recalibrating the entire global system, would require a massive coordinated shift, and the switching costs are just enormous. Inertia is a powerful force favoring the status quo.
Okay, number 4.
Fourth, you can't discount U.S. geopolitical influence. America's military power, its diplomatic networks, its alliances, these all provide a kind of implicit backing for the dollar. Well, the currency of the world's leading superpower naturally carries inherent clout. U.S.-led institutions like the IMF and World Bank, while global, have historically operated within a dollar-centric framework. Key alliances, say with Europe, Japan, or security partners like Saudi Arabia, have also traditionally favored dollar use. Some even argue the U.S. Navy protecting global sea lanes underpins the dollar-denominated global trade system. It's not just economics, it's geopolitics.
Interesting point. And finally,
the dollar-based system has proven its flexibility and policy resilience, particularly through the actions of the U.S. Federal Reserve. The Fed effectively acts as a sort of global lender of last resort in crises.
those swap lines you mentioned.
Exactly. By extending dollar swap lines to other major central banks during crises, like in 2008 and again during the COVID panic in 2020, the Fed provides crucial dollar liquidity to the global system. This helps prevent global financial freezes and stabilizes the system, which ultimately builds a long-term trust in the dollar framework.
So putting it all together, what's the general consensus among the experts looking at all this? Where do they land on the dollar's future?
Well, the broad consensus among most mainstream experts, people at places like the Brookings Institution, former Fed Chair Ben Bernanke, prominent economists like Eswar Prasad at Cornell, is that the dollar's top status is pretty secure in the short to medium term, maybe the next decade or two.
Why so confident?
They mainly point to the lack of a credible challenger that can match the dollar on all those fronts we just discussed, especially the sheer size and liquidity of the U.S. bond market. As Brad Setzer at the Council on Foreign Relations often argues, without a U.S.-sized, safe, liquid bond market, you simply can't compete with the dollar as the primary global reserve asset. The alternative, some economists, like Michael Pettis, argue that a gradual decline of the dollar's dominance might actually be healthy for both the U.S. and the global economy.
Healthy.
His argument, simplifying a bit, is that the dollar's global role forces the U.S. to run persistent trade deficits to supply dollars to the world, which creates domestic economic imbalances. He suggests a less dominant dollar could help correct these imbalances over time.
Interesting perspective.
And you see U.S. policymakers like Treasury Secretary Yellen grappling with this inherent dilemma. They want to preserve the benefits of the dollar's global role, that exorbitant privilege, but they also recognize that overusing it, especially through sanctions, risks accelerating the search for alternatives. It's a fine line to walk. Ultimately, maintaining global confidence in the dollar requires responsible U.S. macroeconomic policies, managing debt, keeping inflation in check, and maintaining political stability.
So there you have it, folks. The really dynamic, complex story of the U.S. dollar. As a Council on Foreign Relations brief aptly summarized it, the dollar is still king today, despite recent challenges. Its incredible rise was rooted deep in America's post-war economic might and, let's face it, the deliberate construction of a dollar-centric world order.
That's right.
And its relative evolution.
The gold link to the 2008 crisis, where it paradoxically strengthened, and even through the sanctions debates of recent years, the dollar has proven remarkably adaptable. History shows us that dominant reserve currencies don't last forever. Just look at the British pound sterling's gradual fade through the 20th century.
A slow process.
A very slow process. But they also don't just disappear overnight. The strong consensus among experts seems to be that the dollar's dominance will likely evolve, maybe diminish at the margins, rather than face a sudden collapse. The global financial landscape might be slowly democratizing, as the Atlantic Council put it, but in the foreseeable future, the dollar's dominance will remain.
So maybe reports of the dollar's death are greatly exaggerated.
But perhaps its absolute, unquestioned hegemony can no longer be entirely taken for granted either. It's something the U.S. needs to actively maintain now.
Which leaves us with a final thought for you, our listeners. What does this ongoing evolution of the dollar, dominant but maybe less so over time, mean for global trade, for the international